Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at natural gas on the hourly to start. Well aware the mic sounds different, using a backup for the short term. So we've got a huge bullish day for natural gas. And we saw first thing back here, the trend starting to change where we had our higher low and then we did get a higher high. But even then, we still need a lot of proof from the bulls to believe that the trend had changed. As soon as 3444, this little quintuple top, was turned into support, that's when we really knew that the trend was changing and that the lower high pattern on the hourly had broken to favor the bulls. So we have now seen green candlesticks, or we had seen green candlesticks 3, 6, 9 in a row. Huge move to the upside. We got pretty overbought. The RSI was in the upper 80s on the hourly time frame. So now we're consolidating. Bulls are looking for it to be a normal, healthy bull flag, but we could really pull all the way back to 350. And if the bulls held 350 support on the back test, that would show tons of strength going forward, and we would look to progress from there. So you can see all these resistance levels, taking out 3 resistance levels today in anticipation of that inventory report tomorrow. And we're just looking at the high here of 360, and then we start filling this gap from the gap down open. So 360 resistance, we topped out at 3593, normal healthy consolidation, and then we'll see if the bulls show back up. The 4-hour time frame got right at the RSI level of upper 60s as well. We didn't even get overbought there. And you can see we have seen 3, 6, 8 green 4-hour candlesticks in a row. That is very impressive for the bulls. Probably the longest streak of green in a row we've seen on this time frame in quite some time. So very clearly changing the trend back to favoring the bulls. We knew that the trend was bullish on the daily. We were just looking for a new support level to be established. That 328 level, although we dipped below it, the bulls held it. And look at the rally off of that level, taking back pretty much 4 consolidation days with one big, huge bull green day. So we do have a gap to fill up at 3661 if we can get above that last resistance of 360. And we'll be looking to see normal healthy consolidation back to 350. If we do drop down to 350, it's definitely worth scouting for a potential bullish entry in my opinion. And we would know to exit if 344 were to break. But I can't imagine that we would give back all those gains unless it was a pretty bearish reaction to the inventory report to head all the way back down to 3444 after this strong move up almost to 360. So the bulls are just flexing their muscles and proving that they were just taking their time on that consolidation, normal and healthy, and then they let it rip. So looking at the weekly time frame, we have a big time bullish candlestick. We are not confirming the bearish reversal candlestick from last week, and it was just normal healthy consolidation. New support is now established at 3242 to be exact. That's now our higher low, and we'll see if the bulls continue to form higher highs from here. Great day for the bulls. Let's look at you guys just to see how it played out. And the size of the gains, we were up over 20%. Bullish reversal doji at the 200-day moving average and a huge gap to the upside. And this is actually a bullish island formation. And not as common, but we have bearish island formations and bullish where you have a gap down and then a gap up, and certainly a reversal signaled by that pattern with the strength we saw. So 42.96, a break of that level, and we're looking to fill the gap at 45.51. Close at the high of the day shows strength. We'll see how much consolidation occurs overnight. Congrats to any bulls, and we'll check back in tomorrow.